For improved system performance, long-term financial returns, and less risk on your PV projects, look to the proven performance of DuPont Materials and Solutions.
Hello and welcome to this week's PV Tech Newscast. Coming up, Department of Commerce announces preliminary anti-dumping margins against Chinese manufacturers. Inventux is latest to enter bankruptcy. And Martifer Solar USA plans to achieve 100 megawatt pipeline in 2012. We start this week by taking a long, hard look at the issue of dumping margins in the US. The Department of Commerce recently announced its affirmative preliminary determination in the anti-dumping duty investigation of imports of crystalline silicon photovoltaic cells from the People's Republic of China. Brought forward by SolarWorld last October, Commerce has determined that Chinese producers and exporters sold solar cells in the US at dumping margins ranging from 31.14% to 214.96%, citing this as less than fair value. Mandatory respondents in this investigation are the collapsed entities Suntech Power and Trina Solar. Both received preliminary dumping margins of 31.22% and 31.14% respectively. 59 other exporters qualified for a separate rate of 31.18%, and all other Chinese producers and exporters received a preliminary dumping margin of 214.96%. As a result of this preliminary determination, Commerce will instruct US Customs and Border Protection to acquire a cash deposit or bond based on these preliminary rates, applicable to all entries of Chinese solar cells made up to 90 days prior to the date of publication of the preliminary determination notice. This will be in addition to the preliminary countervailing duties unveiled back in March. Okay, so all of this was brought to light by US-based manufacturer SolarWorld, who formed an alliance with other companies to create the Coalition for American Solar Manufacturing in October. However, there is now a great deal of speculation that China will retaliate, as Commerce's response appeared as a surprise to many in the industry who were expecting tariffs at approximately 20%. Many Chinese companies have expressed their determination to maintain relations with the US, and they're optimistic that the final determination in October will yield more favorable results. In anticipation of others following suit, Taiwan-based Motec Industries is now offering a solar cell certificate of origin to customers wanting to avoid the newly imposed import tariffs on Chinese solar cells and modules. Motec makes C-size solar cells in Taiwan, which are excluded from the import duties, as well as having a module assembly plant in Newark, Delaware. The Solar Energy Industries Association issued a statement calling for a mutually satisfactory resolution of the growing trade conflict, and the Department of Commerce will publish its final determination later this year. Now, first-generation PV thin film adopters are falling like flies as Berlin-based Inventux files for bankruptcy. Inventux was a customer of Oerlikon Solar and an early adopter of its micromorph silicon turnkey technology. A temporary insolvency administrator has been appointed by the local court in Berlin-Charlottenburg, which is understood to be looking for new investors and secure some of the 200 jobs at risk at the company. The widely accepted view is that the decline in crystalline silicon module price is due to the rapid fall in polysilicon prices and the ability to scale production facilities to the gigawatt level while continuing to improve conversion efficiencies at the same or better pace than silicon thin film producers. The administrator said that Inventux would continue to operate while new investors were sought. Endemic overcapacity and continued price declines towards manufacturing cost levels within the polysilicon sector have forced Korea's largest poly producer to delay previously announced plans to build further plants. OCI is estimated to have reached an annual capacity of 42,000 million tonnes at the end of 2011 and had plans to reach 62,000 million tonnes with contributions from its 20,000 million tonnes P4 plant and a 24,000 million tonnes P5 plant that was revealed in April 2011. OCI was expected to reach nameplate annual capacity of 86,000 million tonnes by 2013. On a slightly more positive note, despite the seasonally weak first quarter, Trina Solar has reported module shipments of 380 megawatt and revenue of $349.9 million. Continued ASP declines, despite cost reductions, resulted in the company reporting a net loss of $29.8 million compared to a net loss of $65.8 million in the fourth quarter of last year. Trina Solar guided second quarter module shipments to be in the range of 500 to 520 megawatt. Although market conditions remain cloudy as FIT reductions in key European markets have yet to take effect, Trina Solar guided total PV module shipments this year should be between 2 and 2.1 gigawatt, representing an increase of 32.5% to 39.1%, respectively, from 2011. And finally, executives at Martifer Solar in the US advised that the company plans to exceed a 100 megawatt project pipeline in 2012 and has an additional 30 megawatt already signed. Martifer Solar expects to achieve its goal with plans to enter additional markets and continue its success with installations for schools, multi-site commercial projects, solar gardens and small utilities. Well, that's it for another week. Stay up to date on pv-tech.org or follow us on Twitter at pv_tech. Until the next time, goodbye.